So I'm joined now by Stephanie Wu, our head of global emerging market equities. Stephanie, an environment of higher for longer interest rates, how do you think about this scenario for global emerging market stocks in the second half of the year and beyond?
Yeah, great question. Obviously, as you know, we emerging markets equities staged a very powerful relief rally into the Fed pivot late last year. Emerging markets ex-China, I think, were up 20%. So that would suggest that, with a higher for longer rate environment being priced in now, this is a negative backdrop for the asset class. And I think indeed we've seen that some of the early cutters have been penalized. Markets from Mexico, Brazil to Indonesia have really been pummeled this year as the market was starting to price in. As the market shifted from 7 rate cuts to only 1 cut this year and maybe 3 next year. So the question is, are emerging markets equities going to remain hostage to the Fed? And I think that's a really hard question because for us, the outlook remains constructive on emerging markets equities. We see very strong earnings growth momentum coming through. Inflation is not an issue. Valuations remain attractive across the board. However, we do know that a stronger for longer rate environment may bring about a stronger for longer dollar. And a strong dollar is traditionally very negative for the asset class. So how do we view the next 6 months here? I think it is our view that typically we see the dollar weakening about 6 to 9 months after the Fed, the peak in Fed rates. And so we're kind of nearing that point in time where maybe the dollar is going to ease off a little bit. Against that, perhaps some election anxiety in the US that could kind of keep the dollar stronger for longer. But really, we're now going into a scenario, which I don't want to use that famous sort of Goldilocks analogy, but where we do see growth coming through, inflation across emerging markets being very contained, scope for emerging market central banks to decouple, and the earnings growth momentum coming through. So I think I remain cautiously optimistic.
That's wonderful. Stephanie, thanks a lot for your insights today.